fact that Mr. Putin said our military exercise is over and we're going to be pulling our troops away from the Ukrainian border, was that the catalyst for the big rally?
It was, and it makes me think that Vladimir Putin has a trading account, and he got long a whole bunch of index options a couple of days ago. No, but in all seriousness, the market got very overextended last Thursday. We picked up in some of the models that I've spoken about before on the air, vastly oversold condition across the entire spectrum of U.S. cash equities. And it was bound to be a snapback. Of course, I had a little tough time getting traction in here because of the typical geopolitical tensions. But a couple of things to point out. It was indeed the Russia story the whole time. I heard a lot of people talking about rate rises coming sooner than expected. That wasn't the case, and all you had to do was look at the 10-year bond yield to know that that wasn't the case. So we're clearly dealing with global conditions, global geopolitical conditions, and listen, our models tell us that this will snap back, and as long as we don't have a further deterioration at Ukraine and Russia, forget about Gaza, forget about ISIS, at Ukraine, Russia, we see no reason why the S&P 500 can't trade all the way back up to the 1985, 1990 level.
It's interesting, isn't it? Trent, let me ask you, I feel like we're a headline away from a 200-point move, up or down for that matter. So as an investor, how do I play that?
There's a couple different ways you could play it. If you're looking for an up or down move without getting too technical, although the VIX has spiked this week, we're still at historically low levels. So using an option play on either side can help you do that. I would personally have bias to the upside, and I agree with what Keith just said. I think that when you take a look at what's going on, even yesterday as we were selling off, there was blood in the water late last night when the news of the airstrikes in Iraq came out. You had a lot of people changing the narrative, and when you really step back and look at it, you know, at the lows of the session earlier today, we were 5% off of all-time highs, and we were in an overextended market to the upside. We hadn't really had a correction of any sort to speak of since April. So when you take a step back and look at it, we're still really dealing with a Fed-dominated marketplace. And if anything, the geopolitical risks that we've seen rear their head over the last couple of weeks, it may actually make them think twice about raising rates sooner. They might even push it back. So I don't see the narrative with the Fed changing whatsoever as far as rates are concerned. I think that as we move forward in the latter part of the year, you're going to see a lot of what you saw today, which is the equity markets bouncing if you get a retracement of 4 to 6%. So,
Jeff, let me come to you. Is it kind of a risk-off atmosphere right now? We've seen gold slightly move lower, but overall we've seen the treasuries cut their losses. Do you feel, but of course that can change in like 30 seconds, right?
Oh, it's that long. But the truth of the matter is our market has really given up already all this geopolitical risk. We're back to basic supply and demand. We have to worry about real things here. The speculation of, let's say, political issues that come into play, military actions, really have pretty much gone by the wayside because they haven't affected any of the, let's say, supply systems that are going. All the deliveries are fine. There's plenty of product around. The interesting point of our market today is natural gas, which was being written off about a week ago, is on its way into the doldrums, going down to $3, has really lifted its head here. Everybody, I think, is starting to play the hurricane card right now, hoping that maybe we have a hurricane season and they can catch one of those big moves to supply disruption and maybe see natural gas go over $5 to $6.
Fascinating stuff. Keith, Trent, Jeff, thank you so much for joining us on a winning day for the market. Have yourselves a great weekend. We appreciate it.
Okay.
All right, the closing bell ringing in 38 minutes.